All right, welcome back. I hope you all are having a fantastic day. We have Gareth Soloway back with us. Gareth is the Chief Market Strategist for In the Money Stocks and a familiar face all over the internet these days. You are becoming a celebrity. Gareth, how you doing?
I'm doing all right, Greg. Been a wild day, wild week, wild month, but this is what we live for as traders, you know.
Yeah, it's really funny, man. Every time we do this, and so we schedule these usually a couple of weeks in advance, and it seems like every time we do this, we've got some serious activity going on to talk about. And I know the markets are really reacting strongly here today. It's been kind of leveled off since the Fed, but man, all of a sudden today it decided to act up a little bit, and
Yeah.
Bitcoin seems to be holding its own so far.
I know, kind of interesting with Bitcoin, based on the chart on Bitcoin, I'm expecting kind of a little bit of a micro breakout here. So it'll be interesting to see if we get that. But I love the price action in Bitcoin, at least for today. The question is, can it hold? What does Amazon do after hours? That's the next shoe potentially to drop. Maybe it comes out good. Maybe it kicks off a little bit of a reflex rally. We'll have to see.
Yeah. Well, let's take a look at Bitcoin. I know everybody is interested in that rebound you're talking about. So let's see what you're looking at.
Yeah, let's bring it up here. And right now I have my Q's chart up, but let's go right over to Bitcoin and see what we got on this front here. So basically what you got on Bitcoin right now is, and I think we talked about this last time, is you're basically trading within this parallel kind of channel where you connect the highs and then perfectly parallel connects the lows, right? And what you saw recently, just in the last day, is this Bitcoin kind of grind up here and go right into that downsloping trend line. And I think it's amazing because if you look at the downsloping trend line, it connects exactly from the high to the next little pivot right here, to this pivot, and then once again right here. And it makes sense that price is getting rejected there, right? I mean, that's a resistance line. It's almost like a door that's closed, and Bitcoin fell back off of it. Now, we are seeing today, even with the drop in Facebook, that you're seeing Bitcoin kind of hold its own right around 36,800 here. The general, probability wise, and I deal with probabilities with our charts, is that when you see this pattern where you have this kind of underbelly trend line like this, and you have this down sloping trend line, usually what happens when you hit that line, you pull back like we're doing, and then you get a little bit of a short-term breakout. Now, again, by no means do I think this is a major move where we're going to go back to the all-time highs, but I'm kind of in the camp that we should probably head back to about 46,000 over the next week or two. So I'm still in that camp. I'm still long a very small position on a swing trade basis, looking for a move above 40, maybe as high as 44 to 46,000.
So why 46,000?
Well, so 46,000 is the first major resistance, right? So if we clear off these lines here, I want to just show you guys. So, I mean, you'll have a little bit of minor resistance right here, just above 40,000. You can see these pivot lows, that creates a little bit of resistance. But overall, if you get a breakout of this trend line, I mean, if you think about it, right, this trend line has capped Bitcoin's up moves every single time since the all-time high. So the idea is that if Bitcoin can actually get through that, it's not going to just go up a couple $1,000s to 41, right? I mean, we've been testing 39, 41 will be a little resistance. Maybe it pauses there, but the idea is it'll have a bigger break to the upside. And the next major resistance line is these lows. So you saw this big dip over here, and then this long basic consolidation right through here, where you can see all these little tails kind of hammering on it. So what that means is that it basically becomes a resistance trend line on the way up. So if we do head up to that, that's where you're going to really meet some major resistance.
Yeah, awesome. I love your channel. You shared that on my channel the last time we talked, and then you were on some other YouTube channels with sharing this thesis here, and now you see it everywhere on the internet. It's really funny, but that was awesome. You came out with that, and then everybody's like, "Man, that makes a lot of sense."
I know, you broke the news, man. You broke it.
I want to show you something that I've been working on to get your thoughts. I'm not a technical analyst by any means. I am not a chartist. That's why I have you on here, because you are the expert. But obviously tracking the same trend line on the downtrend, tracking this bottom of your channel here. So it looks like Bitcoin's kind of squeezing down into this little area of resolution to your theory of a bounce or a break, right? But more likely a bounce, because we've been in this pattern, and this sell-off here started yesterday, preceding the NASDAQ, which is interesting because Bitcoin led the last time. But I did a video the other day where I said Bitcoin is going to bottom on this day at this price in this current cycle we're in right here before we get a retrace. And the way I came up with that was there's a death cross, as you know, the 50 and the 200 crossing over. And I noticed that the death cross occurred the exact same amount of days from the peak this cycle, the first top, as it did the second top. So this previous all-time high, the death cross occurred the exact same amount of days as it did the first time. So I said, wow. And what I've been looking for is for Bitcoin to kind of follow maybe a little bit of this and bounce, or maybe a little bit of this and bounce. So I looked over here and I said, well, from this point of the death cross to the bottom of this area here, June, July, was 31 days. So from this death crossover to 31 days leaves you at February 14th. Where's February 14th? Right there.
Wow. I
Isn't
love
that something?
You're a man after my own heart, Greg.
So I
mean,
called
this is what I
36K.
live for. So
I
great
called
job.
36K range. So I called it right here. This video I put out on January 14th. We were right here at 42,000. I said, Bitcoin's getting ready to drop. I said, we're going to bottom at 36,000 range. Based on that, I extrapolated the number of days, the amount of percentage it dropped. And I kind of guessed where we'd settle here and where we'd drop. And we ended up wicking to 33, but we closed at 35,000. And it's been in that range ever since. So my theory is we're going to roll over, bounce, then retrace like Bitcoin does after a big sell-off. It always, well, it pretty much always retraces like it did over here. The thing that's interesting is the retrace that I'm tracking is a Fibonacci like 0.5 to 0.618, which would take it into the 50,000 range. What do you think about that?
I think that's definitely a possibility. And again, what's interesting is the midpoint of that channel. If the highs connecting the highs and the lows that you have there, the midpoint is actually right now around 52,000. So that would be kind of my bull case. And I can show that again for you guys, is that if we did get a major, kind of short-term bottom in Bitcoin, then yeah, I think this midpoint would be the expected kind of retrace, which again would be 50% from the low to the high. It would be a 50% retrace there approximately. So I think that's a very valid point. And again, for me, it's a tricky kind of dance because I'm dancing around the deleveraging that I still think has to go on in the stock market. I do not think, even though you're going to get bounces, but I don't think that we're fully bottomed out on the stock market. And then the question is, well, if the stock market continues to decline, let's say we just get another 10 or 15% down on the NASDAQ, how does Bitcoin go to 52,000? What's the catalyst for Bitcoin to get there? And that's what I'm struggling with. You try to look at those things because ultimately I still have it priced in to eventually go down sub 20,000. But again, that's kind of the kitchen sink scenario where you have this full out, deleveraging event where everything gets washed out. Right. So again, it doesn't mean that's going to happen in the near term. That still could be a ways in the future. Yeah.
So my theory on that is, what we just looked at when we get that rebound, that retrace, wherever it goes, the 45,000 range you're targeting to the 50 to 55,000 range that I'm targeting. And again, when I said the bottom, I meant for this cycle of a retracement. And then what I'm expecting is we're going to bounce, retrace, and then go back down and test that market structure low at 30,000 to see if it'll break there. And if it breaks, then we're going to go down and test that previous all-time high at 20. But I've got it right now, retracing, then breaking, into that $30,000, previous July low market structure, because that's major market structure. If that gets broken, then I think we're back to the 20,000. And
I agree.
If that breaks, then who knows what happens.
And I'm sure if you look at it, if you just look at a lot of the average investors that have bought in, that's the level, the 29,000 level is what they're eyeing. I mean, that's the kind of line in the sand. And I think if you break that, it's going to be a very much of a throw your hands up in the air type moment of saying, oh, what the heck, I just got to exit. And, it's kind of that despair. You enter the different cycles of a bear market, right? You start out with denial and eventually despair and acceptance eventually.
Well, it's tough. I get a lot of messages and comments from people on social media that, they bought in the 60s, 50s and 60s. And, there's a thing out there, 70% of the people that have entered crypto, have entered in the last year. So they're buying at all-time highs. So, a lot of people are watching these levels and wondering what to do and those types of things. But it's, to your point about the catalyst. So all of this, obviously, the invalidation would be any kind of a black swan, global crisis, conflict, with Russia, that could bring, a market dip that could just invalidate everything. A coronavirus popping up could invalidate a sudden market sell-off that we're not seeing that just pops up could invalidate like a Facebook to a, exponential degree. But I think a good catalyst for a rebound and a massive rebound could be the Fed and projections, and it's already starting to happen, the chatter coming out of the Fed board that they're not going to do anything in March, that they're building a case to not raise rates and not do anything other than push it off a little further. You saw the, European Central Bank just came out and said, ECB just said, we're not going to raise rates. England did, but not the ECB. Is that correct? Did I get that right? ECB didn't raise rates?
Yeah, I believe it was the ECB. Yeah.
Yeah. England did, but not ECB. So, the Fed's trying to build a case. So that could be a catalyst. If there's a consensus that they're not going to do anything, man, it's risk back on again.
Yeah, it is. And that's kind of been my thesis as well, is that I still think they're going to raise at least once this year, maybe twice. But my guess is that the damage to the equity markets will become so dramatic that it's going to naturally slow the economy. And in many ways, if you see people's 401ks dropping 20 or 30%, it'll take away some of that inflation pressure as well. Just the same as we've seen, plus the supply chain reopening and everything like that. So I don't think, again, inflation's going back to 2%, but if you get a stock market sell off and inflation is down at 5 or 4%, and the economy starts slowing and unemployment starts rising dramatically, the Fed definitely will go back into the mode of saying, okay, we have to attack and get unemployment back down, which means printing more money. And they'll say, okay, we can tolerate a short term, and they'll use this term, right? They're not going to say it's going to be long term. They're going to be just the short term 5% inflation. They'll kind of make everyone feel, okay, oh, it's just short term. So we'll go with the unemployment factor being the bigger issue right now. So
the Fed's going to go down as the greatest pump and dumpers in history.
They absolutely will.
We could just be repeating these cycles for a little while.
Yeah. And then, I mean, what I've always, and I think I've talked with you about this before, but what's going to be so interesting is when the merry-go-round stops, right? So, you can only have so many times where the Fed just comes out and prints more money, and then inflation is here, and we're already seeing it, right? So they were able to do that with minimal inflation for the last 20 years. Now they're starting to have to pay the price with higher inflation. But the question is, at what point does the whole system just kind of collapse down? And at what point does the dollar collapse? I mean, is that going to happen at some point? I think it will. Still years and years away, but you'll get a scenario where I do believe the Fed will be the scapegoat and kind of the one that everyone says, oh, it's their fault. Especially the politicians will want to put blame on someone. And then at that point, I really believe you'll come out of this cycle or that cycle with some sort of crypto, currency. I don't want to say Bitcoin. I don't think it's going to be Bitcoin. It'll be something that the government prints or creates, but it'll be stated. I mean, there's going to be a stated run, meaning that there can only be X amount printed per year. I mean, there'll be certain restrictions on it because I think that the damage that's being done now will be so epic that the public will demand it. You're not going to just be okay with saying, okay, well, I'm going to make 50,000 this year, but the government can print all this money and just annihilate my buying power. There's going to have to be some restrictions in the next currency, whatever that may be. Yeah,
I agree. Let's take a look at the markets and see what you're seeing there. And maybe we can get you to throw us a little nugget on Facebook when we wrap up and look for an entry there.
Yeah. So we have the NASDAQ 100 here, which obviously is the most volatile of the markets today. We're seeing a big drop, over 3% to the downside. And this is obviously on the back of fear from Facebook. I mean, it's one thing to see earnings cause a drop in a stock, in $1 trillion stock of like 5%. It's another to see 25 or more percent. I mean, that is scary to see. There are so many pension funds and all these funds that have major positions in Facebook that are just reeling today, right? And they're going to reduce their share size. So that's definitely contributing to the downside. Now, is there value there? Yeah, there probably is. I do think that Facebook will get the ship righted and probably push into this meta universe kind of stuff more and more, although the profitability of that is very long term. But I mean, I do think that there's value here in Meta, and we'll look at that in a minute. But what you can see here is that this is the chart of the NASDAQ 100. And this is the pandemic start, right? So this was your March 2020 dip. And then from that point on, you basically played up and down inside of this upper range, right? Just kind of staying with the dotted line and the high end of the line until right here. So the idea is now you're in this lower range where you're now bouncing inside of this lower range. And so technically, notice how the low of the pandemic connected to the low just made last week. That is perfectly parallel to the high end of the line. So you do have a line in the sand here, at least in the near term, to trade against, which is this lower upsloping trend line. And the question is, again, at some point, I do believe we break to the downside, but really you could be a buyer of this line until it fails in the stock market and in the tech stocks. So very interesting chart here. I do think that, again, if you look at the longer term, and this goes with the S&P 500, you have to understand that if the Fed is really serious about pulling all of the stops out and taking away all the stimulus, then the long-term trend of the market is probably where we're ultimately heading, right? So this was the market on steroids, or epically big steroid amounts, which is the post-pandemic, the March 2020 dip. The Fed comes out and prints, the government prints, sends checks to Americans. It goes up like this. Now you've broken. Eventually, I think you come back inside of this range, probably within a year or so. I would think you're back, maybe even by the end of this year.
That's your soft landing that everybody's talking about with the Fed. And what's interesting about that, that's the same thing that happened in the real estate market, 08, 09. So it took the big crash, and, there was a steady uptick in values of real estate, 10%, 15% a year, depending on the market. Obviously markets are cyclical, but had the big drop, and it took a number of years to get back, and it got right back in that channel. And now we've, ripped up. So that's an interesting thought there in chart to look at from the standpoint of a deleveraging event. And that's kind of what we talked about before, where I could see us getting back to where we normally have been before the crash of March 2020 on about a 10% appreciation, which kind of keeps it in that channel.
Yeah. And I think that makes a lot of sense, at least, right? Like you said, if it's a soft landing, if it's the Goldilocks, can the Fed muster some? And what's kind of scary about that is that to get a Goldilocks or soft landing, the market still has to go down another 10 to 15%, right? So, I mean, that's kind of usually we're thinking when we hear Goldilocks or soft landing, you're like, oh, it'll be gentle. The markets will kind of just go sideways for a while and then continue their way up. But in reality, you probably have to see more downside come in on this market.
Yeah, I agree. And that's not a bad thing. I think it's just opportunity, and it'll be a lot of fun trading that range while we make our way down.
It is. And that's what I've been doing. I mean, it's been so fun because, listen, it's hectic, it's stressful, of course, but I mean, you've had stocks, and what's interesting here, and I want to point this out, is that, let me bring up my charts here, but some of the stocks have already been demolished, right? So if you look at like C Limited, which was trading at $375 back in late October, it bottomed out at 120 basically a week ago. And you've seen a beautiful bounce in this stock. So, I mean, it looks so small on the chart, but it went from 120 to $160. So you're talking about a 33% move in essentially 3 trading days. Now it's pulling back a little bit, but I mean, that's the type of what swing traders live for, is when you can get in a matter of days, 20, 30% returns. I mean, there's nothing better in the world. And you can see this type of chart on, other names as well. NET has had a major bounce, went down sub 80, went right back to 100 and change. So the 25, 30% gain right there as well. But again, this is what I've been saying for a while, is that once the Fed takes those bumpers, those lane bumpers out from the bowling lanes, the market is going to get much more volatile, and you're going to have to be more of a trader versus a buy and holder, right? So buy and hold was easy when the Fed was always there to cushion the market, not so easy now.
Yeah. And, that's the stocks are becoming cryptos. The charts are starting to look like cryptocurrencies instead of stocks.
Yeah, they might as well just legal out, get the ETF, the actual ETF of these cryptos out there, because the volatility in the market is the same anyways, right? So
Yeah, exactly. That's awesome. All right. So Facebook, can you throw us a little bone there? Facebook is still bleeding, I think, as we're talking. I'm going to post this video right away, so it's time sensitive, but
awesome.
Where's the bottom on Facebook for the day? What kind of a swing can we look for on Facebook? I know it's coming back. Company's not going anywhere, but that stock, I think, is going to bounce at some point.
Yeah, and I agree. And you're so, just to full and fair disclosure, I did start to inch into some Facebook today, just around that 240 level, right? So, and basically what I'm doing is just dipping my toe in the water, fully understanding it can go $5 or $10 or $15 lower, where I'll just add, maybe every $5, every $10, I'll just add a little bit more to the position. But you are getting into some big levels here. So there's a gap fill that I'm watching, which we're basically into now, or just shy of right here, which is right around 235. So a big gap fill right there. And then once you get below that, there's even more support where you get down to the pre-pandemic highs. And again, here's your March 2020 dip, and look at where it was trading just before that dip. So what I've been seeing on a lot of stocks is that a lot of these stocks that did really, really well during the pandemic, they're all falling to those pre-pandemic levels, but they're falling back to those levels and then getting a bounce. So again, I'm not sure if we're going to bounce right here, maybe at the gap fill, or maybe it goes all the way down in the next few days to this 220 level. But I do think the 220 level would be a major line in the sand where it makes sense, right? I mean, so you've now subtracted all the good that people being locked in their houses were forced onto Facebook or went onto Facebook. Now you're getting that pulled out. You're getting it that pre-level, which again, on a technical basis, makes a lot of sense why that would be a good support level.
Yeah, I'm watching that. I think I'm going to make an entry on that today, because what we've seen lately is, a lot of times the markets will bounce right back into the close, and a stock like this down like this today,
Yep.
people will just snatch that up, towards the close today.
Well, and a good example of this was Netflix, right? So, I mean, Netflix got crushed on earnings, and then Bill Ackman came out and said, hey, we just bought, $100 million worth of Netflix, or whatever amount he bought. And so you saw this massive move back. So there's only a limited amount of great quality names that are generating just consistent heavy revenues and good profits. And Facebook is honestly one of them. So, I mean, you're getting this deleveraging, and this is specific to Facebook today, where these pension funds are saying, okay, I got to loosen up because of the volatility. I mean, so just for people who don't understand is, pension funds and these bigger funds, they have a certain percentage of a stock in their portfolio. And the percentage is based on the size of the company, but also how risky it is. Meaning that if you have a stock that goes up or down 1% a day, they'll be more okay holding a bigger position in that. When Facebook drops 25%, it screws up their whole model, right? And they have to go back to the drawing board and say, okay, well, if Facebook can move 25% in a day, we can technically only expose ourselves to, instead of 5%, maybe 2% of our entire amount of money in Facebook. And then on the other side of the coin, you're going to see at these lows, people, institutions starting to say, all right, listen, Facebook's not going away. We aren't in a big position here. So let's actually start to accumulate down here. So there's going to be a lot of shares changing hands. We've seen huge volume, but ultimately I think Facebook does start to get interesting between here and the 220 level.
Awesome. Well, we'll be on the lookout for that today. And I appreciate you taking some time out to talk with us. I know you're busy, and, especially right now, but man, what a time, what a market.
What a time. And let's watch again. I love that you're getting this video out right away, but Amazon earnings after the bell, Snapchat. And by the way, Snapchat's another interesting one, just to jump in here on that, is that, basically it's getting pounded almost as much as Facebook going into earnings. But the question is, can they do not as poorly, right? So there's this weird thing where it's getting punished as if the earnings are just as bad as Facebook. If they can do slightly better, you could actually see a rebound in that stock in the overnight into tomorrow. So, lots of interesting things going on here. Pinterest reports after the bell, another one getting crushed on the social media side. So yeah, it's a fun time to be an investor and trader. Also scary, but fun if you kind of know what you're doing.
Yeah. Awesome. Well, Gareth, thank you.
Thank you so much, Greg. Have a wonderful day.
See you on the next one.